30 minutes to go until the start of most European trading, 15 to be exact. Let's talk markets. Our next guest thinks the euro-dollar is still in a downtrend. He's Marshall Gittler, head of global FX strategy at IronFX. He joins us now in the flesh. Hi, Marshall.
Hello.
The bar chart was who's going to win the currency war. They're not really in a currency war, they would say, officially, wouldn't they, Marshall?
Oh, it's just the spillover of domestic economic policy.
That's the one. Is it fair to say Draghi's got the edge right now or not? Who would you put your money on?
Well, I think what matters is the change at the margin. Japan started its quantitative easing several years ago, a couple of years ago. So any new addition to that isn't really news, whereas Europe is just starting. So that is the news. That is the change at the margin. So Europe is definitely winning at the moment. And also, if you look at the bond yields, I mean, it's really hard to beat Germany they've got negative yields out to 7 years, whereas in fact, interest rate yields in Japan have been going back up.
Look, one of the great debates is this. We're going to see and hear the details of QE. It hasn't even started yet.
Right.
As you say, 1 through to 7 year German bond yields are negative. Switzerland's issuing negative yields in terms of corporate debt. Where does the QE trade take us? Is it euro-dollar? Is it euro-yen? Is it euro as the carry trade? Simon Derrick was here this morning from Bank of New York saying, get ready to induce yourself with huge carry trades, sell the euro and buy baskets of commodity currencies. Where would you look for the way forward in QE land?
Well, I think people basically hate every currency except the dollar. That every country is doing some, or many of the G10 countries, most are doing some measure of they're either cutting interest rates or they're embarking on quantitative easing. The two countries that aren't are the US and the UK. So those are probably the currencies that are going to rally. As you say, we've got a lot of funding currencies, but what
do you buy?
What do you fund with them? That's very hard to say. So I think euro-dollar. The problem is that the euro isn't moving as rapidly as some other currencies. So yes, maybe you can sell the euro by the yen, as I say, is not where the change is right now. I think 6 months from now, things may be different. You mentioned Kuroda's statement. Remember, he said, at this moment,
yes,
we're not planning on doing anything. That doesn't.
But the Japanese do have a propensity to change.
And they could surprise you like they did in October.
Yes.
But still, it's the marginal change from their 80 trillion to 90 trillion isn't going to be that huge.
On the euro again, Marshall, I mean, has Greece as a worry being put to bed for now? They've got till the end of April to submit concrete evidence of what they're up to.
Oh, but the people are already worried about how they're going to fund the redemptions coming in coming weeks,
yeah,
the next week or two. This problem is maybe receded from the headlines, but it hasn't disappeared by any means. And I think it's just going to. They've kicked the can down the road, but it seems to be a very short road, a dead end to me.
Marshall, stay there. We're going to come back to you in a second. Marshall Gittler, head of global FX strategy at IronFX. Stay with us.
Welcome back to Countdown. Minutes ago, before the start of the trading week, Marshall Gittler, head of global FX strategy at IronFX, is with us. What a week. We've got the Reserve Bank of Australia tomorrow, we've got the ECB details on Thursday, and we've got the jobs report on Friday, and we've got China as well. They've cut rates over the weekend, and they're going to tell us what they think growth is going to be. What does that landscape do for your division?
Well, I think the problem is that they've already said that they want to prioritize reform instead of growth. So I think they're going to revise down their growth targets, revise down the money supply targets. I think this means slower growth in China is directly translatable into a weaker Australian dollar, weaker New Zealand dollar, weaker commodities all around. I think it's crucial for the global commodity currencies and the commodity markets around the world.
Does that mean we get a rate cut tomorrow by the RBA? What would we say, 60% chance?
60% chance of a rate cut.
Are you in the 60 camp?
Yes, I think so. I think the news from private investment there has been very disappointing. People were hoping that the non-mining sector would take over from the mining sector, but that just hasn't happened yet. They have to do something to make it more attractive for companies to invest. Lowering interest rates lowers the hurdle rate for investment. I think that's a very crucial point for them. And they've got other measures to take care of the house prices, so that isn't a worry.
Yeah.
One of my pet subjects at the moment is the UK. We've had the best start to sterling trade. Sterling's had the best start on a trade-weighted basis since 2009, up for the 5th week, 7-year high against the euro. Hurrah for sterling. Will it last?
I think we can take a lesson from what happened last year ahead of the Scottish elections. Sterling was very strong, and then a couple of weeks before the election, people
the light bulb went on.
said, hey, there's an election coming on. And then the sterling got hit. I think we're going to see the same thing now. That isn't on people's radar screen, but as we get closer to May, people are going to start looking at the possible results of the election, and none of them look particularly attractive for the economy and the currency. And I think then we may see some weakness in sterling.
Who's first when it comes to raising rates, the Fed or the Bank of England?
I think the Fed. I think the Bank of England would be very hesitant to do it around election time, and then after the election, there's probably going to be a period.
Too much uncertainty.
Yes. Meanwhile, June or September, it looks likely for the Fed.
Yeah.
Just going back to China, the one other article that I read this morning, which was they've cut rates over the weekend, but there's no way that they're going to let the currency go much lower than where it is at the moment. I mean, we're at a 2-year low at the moment. Would you concur with that view? Because that's like turning on a tap, somebody said, which is, lowering rates and moving on the currency as well.
Well, actually, if you look at what's happening to other countries, they're all suffering from the rise of the dollar, and the renminbi is quasi-pegged to the dollar. I think they've got to relax this peg, so I wouldn't be surprised to see it weaken further, because that's just a double hit to growth. Now, they are, as we said, they aren't targeting growth anymore, but still they have to be sensitive to this problem. I think they could loosen the link with the dollar more and let the renminbi weaken further against the dollar, because it's probably gaining on a trade-weighted basis despite the fall against the dollar.
Have you got over the shock yet of the Swiss National Bank ending the euro camp? It's always good to talk to FX guys about that.
As somebody who's paid in euros and whose wife and family live in Switzerland, was a real
shock. That was a shock.
A real shock to me. Yeah, the 2 days before, they said this is the pillar of our economic policy. Yeah. It makes one wonder about the promises of all the central banks. How much can we trust them? But it also just shows the huge forces at work in the foreign exchange market.
And the euro Swiss franc is at 106, Marshall. I mean, has it found a level or not?
I think it will gradually come back up. I think there was obviously a big shock. There was a huge, massive one-way positioning in the Swiss franc. I think that's gradually being worked out, and I think the Swiss franc will weaken somewhat further.
Modi gave us his budget over the weekend, and we've had a view that there'll be more rate cuts to come from the Indians. Very briefly, what do you think on the rupee?
Well, I think their situation has improved a lot, especially the oil. Oil is the lower oil price is a big benefit for them. Combined with some lower interest rates, I think they're going to do very well. The currency, I think it should hold up, I would think.
Marshall, thanks a million for coming in to see us in the flesh, so to speak. Marshall Gittler there, head of global FX at IronFX.
Right, on the moves next, we're going to be chatting to the